Hi Valerie, we need to discuss the tax implications of the compensation package you have forwarded to us for personal tax only. Later, the corporation's tax implications will be discussed. Your salary of $150,000 will be taxed. The bonus will be included in your income or salary for tax purposes when declared. And since it was declared before year end, it will be taxed in the taxable fiscal year. You are being given a loan of $200,000 with no interest payable back to the lender. This is included as a benefit. The calculations for the taxable amount will be the loan amount multiplied by the ceiling rate of the quarter from when the loan was given. Regarding about your moving expenses and reimbursement, the amount will be included in your income as a taxable benefit. Your group insurance can be an exception, and it will not be included in your taxable income. Since you are traveling for business purposes, all reasonable travel expenses except for meals will be paid for by the employer at full, and meals will be paid for at 50% of total. If meals are paid in full by the employer, it can be filed as a taxable benefit. For your husband, Matt, since the employer pays for a portion of his expenses, it will be a taxable benefit, as he is not an employee and is traveling for leisure with you without business-related concerns.
You have two benefits for your vehicle that the company has given to you. One is the standby charge and the second is the operating cost. A standby charge is a benefit of the automobile that is available for use for the employee without having to pay for it. The operating cost is a benefit regarding the use of the automobile. Since the car is not used primarily for business, you are able to claim a maximum amount for the business use. However, if in the future you use a vehicle primarily for business, you will be able to claim a minimum amount of the standby charge. As for operating cost, calculations include total kilometers used in the year times percentage of personal use times a rate of 0.27. This amount of operating cost can be reduced by reducing the amount of personal use of the vehicle provided by your employer. Since you are being given a credit card to pay for gas and maintenance, it is assumed that the employer will be paying for 100% of the expenses. You can assume that you will be benefiting 70% of the expenses as they were for personal use. You will have to include 70% of the total expenses as taxable benefit. The fitness club is not necessarily work-related, therefore it is a taxable benefit given that the employer has provided the free club membership, which is equivalent to $1,100 per year. As for counseling services, under the general rule, the services provided to you or the employees by the employer are not included as a taxable benefit. The amount contributed by Key for RPP is not included as a taxable benefit. It is an exception under the general rule. The yacht provided to executives and you is not business related and is included in your income as a taxable benefit provided by the employer.
I will explain the tax implications for Key. We will use the $150,000 as the accounting net income for this corporation. For one point, we have Key offering to loan Valerie $200,000 interest-free to help finance a new house. In addition, Key will reimburse all of her moving costs. Basically, $200,000 is an amount in respect of a taxpayer's expense that is a remuneration in respect to an employment that is unpaid on the day that is 180 days after the end of the taxation year of which the expense was incurred. For the purpose of the Act, the amount shall be deemed not to have been incurred as an expense in the year and shall be deemed to be incurred as an expense in the taxation year in which the amount is paid. For the third point we have, as Key will be paying the premium for Valerie to join his group term life insurance plan, for Key this is not a benefit. Premiums on life insurance are used as a collateral, and this is deductible. We also see in this case that Valerie will be traveling for work purposes. Key will pay a reasonable amount of hotel and flight accommodations, as well as under the Income Tax Act, 50% of meals expenses are deductible for Valerie only. In the case of Matt, travel expenses are non-deductible for Matt.
Key can claim tax deductions related to the capital cost on the leased vehicle and 30% on the car's operating expense, which in this case includes gas and maintenance charges. Key can also input tax credits paid on the monthly lease payments. Fitness club offered by Key is non-deductible expense. Counseling services is a deductible premium paid by the employer. Registered pension plan is the current deductions made by the employer for the contributions to the plan. I have discussed all the tax implications of the compensation package to yourself and Key. I would recommend you to go over the video again and get a better understanding of the company, as everything was discussed from the letter that was provided. This way you can accept the opportunity if you would like. Please feel free to ask any questions if you have in regards to this offer. We look forward to hearing back from you. Thank you.